Good morning, everyone. Happy Wednesday. Almost 7 a.m. here, March 25th, and price of Bitcoin currently at 65.20. It looks like we just saw a big drop off overnight. And yesterday, we were luckily in a long position with a target right around 69.75 or so. So let me look this up, and I want to show you guys this real quick because yeah, this is one way I let the community know, the kind of positions I'm taking, where I'm looking to get in, get out. So you can see right here, just yesterday at 6:30 p.m., I was having some internet issues here. And so one of the big targets that I was looking for was 69.70. So I basically, had my hard target set there. And you can see we went to a high of right there around 69.85. So just about $15 higher, and then we dumped. Okay. So now you're probably wondering, okay, how did I know, right around that area, that should be a take profit area? Okay. So I've spoken about this before many times, right? When we look at a high that was put in, okay, so like right there, right, the high of this candle right here is, let me see here, 69.46, okay? And so when price essentially comes back around, right? So when it comes back around to that same area, okay, knowing BTC as an asset, something I've traded for a few years now, it really likes to do a lot of liquidity hunting because it's already an illiquid market for the most part. Okay, so the reason it likes doing liquidity hunting is because it's trying to stop out people in both directions as many times as possible before resuming its entire movement down, because it's essentially like carrying too much weight on your back in terms of positions when you're trying to grind up towards a target or down towards a target. Okay, so if you don't want too much weight on your back, what you really do in situations like that is you stop out a bunch of people in the or whatever direction you're trying to head off in, and then resume your continuation. So in this particular case, if this was the high of 69.46, this candle pierced that high right here, as you can see, okay, with a high of 69.84. So just about $20-$30 higher, which means that people who are shorting all the way from here, right, had probably their stop just about a few dollars higher than this candle, and so those people got stopped out by this wick right here, and so now the price is resuming down, right? And so what that really says is there were shorters defending their positions, but also a lot of shorters tried to push the price down as price came back up. So now the question is, okay, well, do we just dump straight down from here, or are we going to, move sideways a little bit and then have another push back up? If we have another push back up, more than likely we're probably going towards this area right here, and that's around about $7,600 to a high of 8,150 or so. Okay, we actually make this a bit more tighter like that. So I think the low of this candle is about 75.93, and the high of this candle right here is 81.50. So 81.50 high and 75.93 low. So that little few $100 range is what we're looking at as our next target if prices do climb back up. So in reality, this could be another potential buying opportunity. But do we see that as a buying opportunity right now? I think it's probably best to just wait. Okay, wait in a sense to understand if this is really the dump that's about to get started and we're just going to go lower and lower, or are we going to find some support in this particular area right here and then push off? Okay, now why that particular area? I'll show you a couple different reasons. Okay, so let's go to a Coinbase chart over here to give you all a better understanding. Okay, so let me turn off this moving average. All right, so I want you guys to look at this chart, all right, from the standpoint of this key high that was, actually, let me pull this down just a little bit so it's touching those, that high, this lower high, okay? So if we look back from 10th of March, that little high that was created, and then this lower high that was created on 11th of March, okay? So one touch, two touch, three touch right there, okay? Let me see if I can move this just a little bit, okay? And I'm not, trying to move the goalposts, if at all. I'm just trying to match the trend line properly because I wanted to touch this, this, and this in a, more best fit way as possible. So actually, the trend line actually does fit pretty well, right? Touch 1, touch 2, touch 3 right there perfectly, touch 4 right there perfectly, okay? So now we're flipping that area, that same trend line, as you can see, as support, okay? So we flipped it as support just yesterday, and now we're coming back to it as support again right there, okay? So question is, all right, if we move this trend line just a little bit more, if we bounce off this area, are we going to push higher? Or are we going to do something like this, maybe meander here and then start cracking this, okay? So my big bet on this is that if this trend line cracks and this trend line breaks at the same time, which, as you can see, they're almost coming to an inflection point right there, perfectly in the next several hours. If they both break together with a candle crossing them, I think we're gonna see a lot more downside, okay? And so where am I seeing a lot more downside? I'd probably start aiming for targets at the very least around this $5,900 area, all right? 5,600, and then if we start going back a little bit, zooming out, okay, we can start aiming for these fibs as well, right? So $5,300, which is right around this golden pocket area of the 618 fib, this low to this high, okay? And then we can start aiming for these X's as well, which is around $4,900, $4,300, and all the way to a low of about $3,600 that we put in on March 12th. Okay. However, the case is that this trend line needs to break kind of like that. Okay. And if it does start breaking, your short can be entered right there, stop up here, and start riding, the targets down that I just mentioned. Okay. Now, unfortunately, there's really no trade to be taken here, all right? One could make the argument that if you start turning on the volume with price declining heavily, volume going down, well, I guess we have 30 seconds left to see if the volume is going to increase. But for the most part, we have 20 seconds left on this candle, right? So I would probably say the volume is going to go down, okay? And, commit to a lower volume. And price is settling around this trend line, as well as an important marker. Okay, and I'll tell you guys that important marker, which is 6410. Okay, and I'll tell you why 6410 is important. Right? Let's go to this chart right here. Okay, so if we go to a daily chart right there. Okay, here's why 6410 is important, folks. 6410 right here was a low of this candle in December 2019. Before we made this push up to the 10,550 marker just last month. Okay, so staying above this area is critically important if we are supposed to push up high. Breaking under this area is going to be essentially counting more downside. All right. Unfortunately, obviously we're sitting up here. We don't really know exactly what's going to happen with price action, but for now, the daily candle doesn't look that great. Okay, so far it's coming to look like a bearish engulfing. Not yet, because we still have about 12 hours left in the daily, but so far it does, look kind of bearish. Okay, so what I'd be looking for is on the smaller time frames, see if we can bounce off that 6410 level. Okay, so if we go back on this chart right here, 6410. Okay, there's a couple different, areas why 6410 is important, even on smaller time frames. You can see that little area right there, all that's rejected right there on this black marker. This black marker that you see going across horizontally, that's 6410. So that's resistance right there, tested as support, tested as resistance, resistance, resistance before it broke up, support right there. Okay, so across, smaller time frames and large, it's become a good area of key SR level. Okay, so we can come back to that same area, okay, and then bounce up from it, right? So that's the area, the real area that I'm watching, 6410, okay? Again, it doesn't have to be that exact marker, but, right there around, $10, $50 up and down, I'd probably say, price should see a reaction there. Either it's going to bounce from here, okay, or it's going to come back here, go like this, and then smash at it again, and then possibly break down. Okay, so that's kind of how I'm watching price action right now. Now, again, if we dial back to the macro markets, right, we could see, the S&P 500, basically all the U.S. stock futures are opening up a bit negative, but yesterday we did see a nice, big bullish candle right there, Okay, so this is a very positive sign. But so far, if you look back on the last several weeks, any green candle has been followed by a pretty bearish day. Okay, so green candle right there, bearish day. Green candle right there, bearish day. Green, bearish. Okay, so for the most part, I wouldn't really count on the S&P 500, having another aggressively bullish day. Maybe potential like doji like this or a small bullish candle. Statistically, over the last several weeks, we've followed, a green day with the red day. Okay, so if we follow a green day with the red day, that would imply that we should be seeing, more red in today's BTC price action. Okay, now so far BTC has not quite moved toe to toe with the stock market. Okay, but also remember that Bitcoin has its own levels, right? Just like the stock market has its own support and resistance levels. So now that Bitcoin has hit a key level of taking liquidity, like I said up here, okay, taking liquidity out of this area right here, also hitting, close to that $7,000 resistance, are we going to go down based on that? I don't know. We'll have to see. If it was, up to me, what I would do is at least try to drive this market a little bit further up to this area and then potentially dump, because whoever is shorting right now, even in this area, still probably has their shorts on. Okay, but they're not going to have their shorts on if price grinds up all the way up there. What people are least expecting, in my opinion, right now is another push back up. I think more than likely what people are expecting right now is price should be going down. Okay, so I think when you have a majority stacked on one side, which is price should be going down, I think it's an easy way to drive up price. Okay, on the 4 hour, we have had a bearish engulfing with this candle right here. But that doesn't mean that you should just jump into price action right now and start saying that, this should be an easy short. Okay, I think there are certain levels that you need to look out for that I just pointed out, right? 64.10 being one, a break above this area. I wanted to show you guys this, which I find interesting. Okay, so if we go back on the weekly time frame, okay, in the weekly time frame, if we turn on this 100 moving average right there, right, notice that the 100 weekly moving average over here, when we started to move up right here in October 2019, we used this 100 moving average as a base right there of support, pushed off. Over here, pretty much resistance right there, and then once we broke through it, we took off. Okay, so I could see us hitting that moving average somewhere around $7,100, $7,200 or so, either today or maybe the weekend time, and then potentially pushing down. Now, what else is around that particular moving average? Okay, which is $7,200. Well, let's see. Okay, let's go to the 2-day chart. Let's turn on the VPVR right there. Okay, if we go back to the 2-day chart, okay, and you look a bit closely, all right, here's what's around the $7,200 area. Okay, remember the $7,200 area has that 100 weekly moving average. You can see this high volume node, right? Remember that these nodes right here are nothing but representations of how much volume has taken place in a particular area of price, or rather range of price. And so if in this case right here, around $7,200, $7,300, a good amount of volume has taken place due to probably this right here, the 6 weeks of consolidation that we had right there. That's where we've spent a good amount of time, and possibly right in the middle of this area right here. Okay, not the top, not the bottom, but more so the middle. And that's why this volume node right here matches this middle area. So it makes sense that if we get up into that area right there, we could potentially get rejected. Okay, now if we zoom out again a little bit more, if we don't get rejected there, okay, what's our next area? Okay, our next area is somewhere around this area right here, 8,000 to 8,200. Remember what I said is around that area. Okay, if we go back, same thing right here, right? This consolidation before this drop off, that 8,000 to 8,150 area. Okay, so we have confluence of this local area of consolidation before the drop off, and we have confluence of the high volume node, which pulls up this node right here from the historical price action of the last 2 to 3 years, giving us this high volume node right there around $8,000 to $8,200. Okay, so not only do we have local confluence, but we have macro confluence of the last 2 or 3 years. So with a high degree of confidence, we could say that in this particular area, we should be seeing, a rejection right here if we break through the $7,200 area. Okay, if we get rejected by the $7,200 area, that means we don't have to worry about this. Okay, so those are the levels I'm looking at. Obviously on top of that, we've seen global markets rally a little bit. Makes sense because again, we've been selling off aggressively. It makes sense that we're going to have a bit of a short squeeze, bit of a pushback up. Have a relief bounce. Also, given the fact that this whole open-ended QE that we had, of course, the U.S. markets are going to see a bounce because this is just a degenerate way of printing money. I don't know how to put it any other way, to be honest. You may disagree with the whole politics of whether you support the current administration or not, but this is just the wrong way of going about things, in my opinion. And whether we pay the price for it right now, I personally think we're going to pay the price for it at some point, because I think we're essentially kicking the can down the road, if you will. Okay, so in my opinion, we might see markets bounce a little bit, but if I'm not mistaken, I think what the markets are really showing us is that things are really weak. Okay, the coronavirus is still an unsolved mystery for the most part. No containment, no cure. Okay, whole parts of the economy still being shut down, and rightfully so, right? You don't just want to start back up the economy and then have a bigger disaster on your hand with more people dying, more people infected, having a countrywide chaos, right? So at least in the U.S., being from America, I can at least criticize the current policies of the administration, that the whole idea that we want to get our economy back on track by, quote unquote, kicking the can down the road and seeing that, all right, well, we'll see what happens kind of thing. It's just going to make things worse, in my opinion. And on top of that, we're not going to have the sort of same fiscal stimulus available if we dig ourselves a deeper grave or deeper hole, right? So the point is, I think even if we have a little bit of a bounce, I still believe in the Dow theory, which is that, this might be the first leg right here. We might see a bit of ranging for a few, weeks or months maybe, and then the final leg of capitulation might still be on our way, maybe later this year, maybe beginning of next year. Okay, you have to take a look at this from the bigger picture. Okay, when you start seeing the markets like just bounce like this, I want you to think to yourself and ask yourself that, is this a rational reason the markets are bouncing up so aggressively? Or is it just that free money is coming into the market and trying to rescue and bail out industries, right? So that's kind of the point, of looking at the markets from a broader perspective. Even Bitcoin, right? I personally think Bitcoin is still going to be severely impacted over the next few weeks, few months ahead, if the traditional markets don't resolve themselves properly. Because remember, Bitcoin is still a speculative asset. And because this is still, in my opinion, a risk-off environment, meaning you don't want to take risks on speculative assets, I would probably say it gets sold, either back to the lows right here or even a lower low, okay? So I know people like to say that, my short bias and whatnot has been wrong so far, but remember, I've also been taking, scalp long positions like this, okay? My scalps are even smaller right now because, again, I don't really trust this market. I don't know what it's going to do. I've reduced my size significantly in this market. I've taken a lot of money off the table. For those of you who are real traders, you will understand that you don't want to be going aggressively in any direction of the market when, the macro picture is unclear, okay? So with that being said, I want you guys to be careful of how the market looks and seems, even if it does start bouncing up a little bit, okay? So yeah, I mean, as for Bitcoin, I'm still going to look at this particular area, the 6410 area, to hold up, see if we bounce from there. That also matches up with, let me see here. Turn this off, go back to that smaller time frame right there that we had. Like I said, it matches up with our trend line that's coming back from, March 10th, and then this ascending trend line, which kind of looks like a rising wedge, honestly. So another thing that I'm careful about, right? I see this rising wedge, and it's pretty obvious, right? We see this uh, big, broad price movement right here, like this, and then it's getting tighter and tighter and tighter. Okay, the reason rising wedges like this are bearish is because what's really happening is after a big, sort of initial, movement down, right? Or even rising wedges, sometimes, they come up like this, right? Prices go like this, and then they tighten up and tighten up and tighten up. So you kind of see, this kind of rising wedge like that. The reason you start seeing stuff like that is because volatility is tightening up and coiling up as prices are grinding up higher. Okay, so that means that the bulls just don't really have nearly as enough firepower or pressure to keep pushing the prices up to a higher degree. And so that means that the bears are starting to regain control, and they're suppressing the volatile, wide movements of price, that it could have. Okay. So that means that the bears are slowly starting to show the bulls that, hey, this is where we start taking over control, and you're not going to be able to get past this particular area. So as price nears, the apex of the rising wedge, meaning the, enclosement of the rising wedge right there, right near the end, bears are trying to defend a particular area, a particular level. Okay, and the bulls are just getting exhausted and exhausted, and they're just not able to push prices up. And then what happens? You start breaking down. And that's why rising wedges like that, they have, something like this where price is trying to move through like this, and then price starts coiling and coiling and coiling, and then eventually the bears sell, break this area, and then price just starts breaking down. Okay, because the bulls are pretty much exhausted themselves out. All right. As per XO, not really seeing a whole lot. I am seeing open interest right here, OI rise a little bit with price dropping. So that means more shorts are coming into the system. Pretty good negative delta, as you can see right there. Cumulative volume delta is also increasing, so also a positive sign. That means that as price is going down, the strength of the sellers and shorters is getting stronger. Okay, so what I want to see, if we're supposed to hold that 6410 area, I want to see OI drop off a little bit, and I want us to kind of grind towards 6410. Okay, so what I want to see is the candle spreads like this getting smaller and smaller. Instead of getting larger, as you can see at the beginning, see how it got, small rejection, larger candle, even larger candle, right? So that tells me that overall price was dumping with accelerating volume and candle size. But now you want to see, if 6410 is supposed to hold, you want to see candle size get smaller, smaller, and then maybe, have like a candle like this where the candle body closes up here, so it looks like a hammer, okay, where it pierces, that 6410 area, and then you can start, moving back up. Okay, so that's kind of what I'm looking at right now. Okay, let me see here. So we talked about XO, we talked about footprint. Let me turn off this, and let's see how the net long and net shorts are looking. Okay, so as of the current hourly candle, okay, so far, shorts are actually increasing, like I said, right? So I told you open interest was going up, and as price is going down, so I told you that probably means that shorts are increasing. So as you can see, that's visible that the shorts are increasing. Longs overall are getting out of the system. Longs got shredded right here, dropped by about 5.5, 5.7 million or so. In this big candle, let's see here, on this particular candle, more longs came into the system. Okay, so it doesn't really make sense, but who knows, right? It could be big players putting up their long positions and realizing what I was telling you, which is that 6410 could hold that support, and we could push off a little bit higher. Okay. All right. Let me check out ETH real quick. See if Ethereum is doing anything special. Nothing as per ETH right now. Okay. Let's go back to the 4 hour. And so ETH had the same, sort of bearish engulfing candle dropping off. But remember, what I like about this, when I see candles like kind of tightening up like this and not really having big volatile movements, this to me is, in my opinion, I think this is being guided into that 6410 area, and I think we're going to pop up out of this, okay? Unless we start breaking down past this level. So my key level that I would look out for is, let's put this up, okay? So let's do this. So remember, okay, this is the key low before we pushed higher, right? And all we've been doing so far is consolidating. Even though it seems like we've gone up and down, you know, a couple $100, right? Actually, let's look at this on Bitcoin, okay? So let's look at this on Bitcoin, all right? That's over here, put that right there. So that's $6,400, okay? Close enough to that 6410 marker, right? So what I don't want to see, okay, is I don't want to see a bearish candles closing significantly under that. If I do, then I want to go short, and I place my stop here, and as price breaks down further and further, I'd, you know, move my stop down here and here and here, okay? That's kind of how I, you know, play the short positioning, okay? However, in this particular instance, as price is kind of slowly being guided towards the 6410 area, that makes me think that, okay, maybe there's some buyers still left in the 6410 area, and they're going to buy up whatever's, you know, being thrown their way in terms of supply, and then drive this for another leg up. And I think that makes our $7,200 target viable, which is that 100 weekly moving average, and this consolidation period of, you know, that $8,000 to $8,200 area. Okay. So that's kind of my game plan, folks. Again, you know, as always, I always let my Advantage community members know. Yesterday, if you were part of the Advantage, you could have gotten out this easy scalp. Depending on your size, you could have, you know, had a good lunch, good dinner. You could have been able to pay your rent. Again, none of this is financial advice. I'm only showing you guys exactly what I'm doing in the market. Okay, so you do with the information what you feel is right, but I'm always here to answer your questions. I'm always here for my Advantage members. And as you can see, through the day, I'm always giving analysis to my Advantage members to show them exactly what I'm seeing, exactly how I'm going to position myself in terms of trades. And then, you know, a host of other updates. You know, Fassel over here gives out live equity updates, you know, at the beginning and closing of the market day. So we know exactly what to look forward to in the macro markets. We know what to look out for in Bitcoin. And then on top of that, you know, we're also opening up Forex options in oil starting next month. So if you do come join now, you will save money by paying the current membership price versus the increased price when we do decide to hike up the prices, okay? So do come join, and you'll get even more services, even more analysis, you know, for the same price. All right, so that's it, folks. Y'all take care. Keep up with the markets, keep your stops tight. Come join Cryptosomniac Advantage, and I'll catch up with y'all soon. All right, cheers.